Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Good morning, Mr. Felix.
Good morning, Marco. How you doing, man?
Good. How are you? How's everything?
Very good, man. Glad to have
Glad to hear.
everybody back. Yeah, it's a Monday. Got a little bit of a headache. I woke up with a headache this morning, so I'm might be a little bit slow in reading this thing. But let's.
As soon as there's no podcast, you get a headache. I miss it too. I can't wait for Mondays. It's fun. So let's get it started. Okay, so what do you?
I think the first thing I want you to make sure that people get to see is, before I forget, that ZeroHedge article I sent you on M1, M2. So pull that up for a quick second just to show people. This was over the weekend. Look, I try to pull these things up when I see them, and send them to you. Just you're my you keep track of all this stuff, because these every once in a while you got to get these good articles. You got to read through 20 to get good ones, but there's a good article here on. It's called "Our Dead Money Economy." I told you, Marco, about 2 months ago that a long time ago, a very senior, maybe most senior economist at when I was working at Bank of America and back in the day at the hedge fund side, they talked a lot about the velocity of money. And I just thought this was a great article that sort of explains what the velocity of money means. It means transactions and things going on, but it does a great job of showing M1, M2, and then the velocity of M2. So if you go down, just go down to the charts that he has, right? There's one. This is the chart where the top one is the chart where you have the money supply growing. So that's the Fed pumping in tons and tons of money. And you see that the M2 money stock is actually getting bigger. That blue line doing a big run. And hold on one second. So in 2010, you see that's the financial crash, and it took off. And then again, we've just taken off again here during the pandemic of 2008. So now go to the next. Go scroll down a little bit just so they could see the next chart. This is the velocity of M2. So the velocity of M2 is essentially the money transacting around and moving around. And in the United States, they make a great point of talking about how the velocity is calculated in the United States. So the back in 2008, the economist was saying that the government, the Fed, is scared of the velocity of money. Okay, they're going to pump in a lot of money to try to get the velocity of money, to try to get people. They're worried about, frankly, after the financial crash, they're worried about people saving. Okay, the more people save, the less the velocity of money is going. Right. So they're worried about that. So they pump in a lot of money to get people to actually, transact. You see what happened. The velocity of money went down from 2010 all the way to the pandemic. And then after the pandemic, or during the pandemic here, it's cratered. And that is when I see that, and I've been programmed just because a couple economists, especially this Bank of America economists, told me that, that's really what the Fed is looking at and what they want. And it made sense to me that a good economy with good employment, transacting, when people are out there going to the stores, buying things, not just food, but buying clothes and spending money. And, that's velocity, right? Because you pay, the barber who puts them, go buys a sandwich and pays Dunkin' Donuts, and Dunkin' Donuts goes, that's velocity. So without that, I don't see inflation really going hyperinflation. At some point, we might get the dollar collapse, and that could cause things to spiral out of control. But I don't think it's going to be because the economy's humming along. I don't think the economy's humming along. Now, people argue, well, we're about to have this the Great Gatsby era, right? Right after the pandemic, everybody's going to go out and start really going through the roof as far as spending goes. And the question is how do you say that the economy has crashed, and then because we're getting back to this push real quickly, that's going to cause the inflation. It seems like it seems like the broken window theory, where you break windows if we broke every window in the United States and then we actually go to fix them, how do we increase, do we increase GDP like that? So there's something wrong with that thinking about just looking at GDP, just looking at employment, because I think you have to look at real employment, like what's it real, these numbers, I'm not sure you have to look into details on what they're actually doing. So that's my 2 cents on the macro. I just think that it's a great article. It's something that everybody should understand what's happening here. And because everybody's talking about inflation and interest rates, we see bonds trending up today. And that's lowers interest rates, which sort of makes the stock market calmer and pushing higher. So I would say that's something to think about. That leads us to Powell making his comments last week on SLR. So we're seeing the banks come off a little bit. We can take a look at a couple of UOA today on that. And he also slammed Bitcoin today. But if you look at the Bitcoin chart, how about this? 3 months ago, a year ago, if Powell did that, the Bitcoin be down 20%. The fact that it's only down small here, it says something to the strength of Bitcoin up at these levels, I think. Anyway, so that was the Bitcoin comment today. And lastly, we talked about UPS and FedEx last week. UPS and FedEx, and in the FedEx news was good. The earnings was good, and the stock went up. We were talking about those 60 calls. They went from, depending on where you might have gotten into them, $1.25 to $1.75. They went to 5.5. Wow. So that was, eventually they ended up at zero by the end of the day. It went all the way down. So the point is to take some as it comes. So that was a setup that we saw live here intra-week that I thought would provide some good risk reward, and maybe somebody did that. Maybe, they played that a little bit. That should have worked for people. Facebook, I mean, the stock is strong here. Let's, I see some UOA today. They're still in the 300s here. So there's a lot going on in the front month, in the front week, but there's a lot here in the Aprils. Let's see here, April 300s, April 300s, 9,000. You see 4,000 here, 3,000. So these, it looked like here, if we looked at these, it looked like there was some profit taken right out of the get-go, just a few thousand contracts. Then they came in to buy some. With the stock moving higher, volatility sort of, came in from where it was. It's still up a little bit, but it came in a little bit here. So it looked like maybe some profit taken, but I won't be able to tell. I don't think anybody will be able to tell right now until tomorrow whether or not this was buying or not. But either way, the stock is trading very strong, right close to 300 here. And, we were thinking breaks that 280 level, it was just going to keep going. And maybe there's a lot of gamma in this 300. If we look at we look at these calls here, and let's just take a look at 290 to 350. Let's see here, 290 to 350. I would say here, let's look at the 5% here. April, June's, January's, but this is a little bit too far out to really call that gamma. So the gamma is going to be in here, but we were looking at here the Junes and the Aprils. For June to be long these, they would got to be thinking in the mid 300s, right? So they were thinking 340, 350. That's where we came up with that target stock price. Can it get there in the next 2 weeks, 3 weeks? Anything could happen, but I would say that probably calms down anywhere between, let's call it the breakout level at around 280 to 315. 280 to 315 probably holds around in the April thing. It's a little bit wide, but that's, it's not, it's only about 5% from here up and down.
Cool.
Okay, so that's Facebook. I would just keep your eye on this one. This is, again, it's two types of investors in this, which makes it very interesting. It's the value investors who think it's cheap, and then the momentum guys who are trying to play this sharp move breakout on that flag. Just to show it to you, the flag here. I mean, we've been looking at it for about a month now, 3 weeks. Let's take a look at a bigger picture. So we were looking at this for a while, talking about a break through these levels. 280, 280. It looks like it tried to get through this last week. There's been good volume on Friday. It continues today. 300 is the level, but I think after doing this for quite a while, you could actually, in a good tape, you could see it trade, let's call it 310, 315 before even coming back. So, you're gonna see buyers here, 285, 290 on a pullback. And again, there's people loaded up on the June 300s and going out like we just saw it. So Facebook, again, something to keep in mind. There's a lot of smart guys in the name, and with calls, and there's two different type of investors. So the other part, the negative, is that they got this potential antitrust, but we talked about, how credible is that risk when the people that are in charge were the people who were put in by Facebook. They were put into the presidency by Facebook. So that's something to consider.
We got a couple people that made 100% in UPS, they said. And also we got Daniel, he made 331% with his Facebook calls out in April.
Nice.
So that's awesome. That's
very good.
It's great to see.
That's great.
You guys let us know if you won from the picks we gave on the podcast. We really
look at that. The April 16th, you bought the 280 calls for. That's awesome, man. That's great. That's awesome. I think, I think those are the plays that they're interesting. It's tough for the winner pick to put it into the premium, because you have to have real money to play in Facebook, because it's a $250 stock and each option is going to cost you $10. So that's great. That's awesome that you hit that. Another name that I think is really interesting that's caught my eye today was let's look at QuantScale. So
QS?
QuantScale is QS is it's interesting. This is an interesting chart to me. Let's frame it a little bit here. Okay, so clearly this is the mountain we talk about, right? This is bad. Okay, but what's happening here is that the stock is holding this 40 level, right? So this is sort of interesting. It's an interesting development here. It's like we have this huge run, it comes down, and we have this 40 to 70 range, okay? And this is a name, QuantScale. We were looking at people selling it here, doing puts and calls, but betting basically the downside literally right here. And we were telling people, we were warning people, if they were in the name, just be careful. This got crushed. Now it's just hung out here, 40 to 70. It's still a highly priced name, but the potential for this is game-changing. This is new battery technology. They come from Stanford University, this team, and they have people like Bill Gates and really the rock star investors, the private guys that would be in the know, at least on new technology. So this is one that I've been always curious about. And today, so we're looking at this, and we're looking at, this is a gap here. So 85, you see this gap?
Yep.
Okay, that right there is something to, if it breaks this, it should trade 85 pretty quickly. And this move down, you see from here, here, and here, there's very little volume. Okay, so you have a lot of room up to about probably, 110, somewhere right around there. Okay, let's call it 105 to 110. You have some room right around there for this thing if it breaks through 70. Why would it break through 70? I have no idea. However, today we're looking at someone coming in to buy QuantumScape. Let's see here, April
80s. Yep.
April 80s. I guess I'm not even gonna be able to see him.
No, you are. You just refresh.
Yeah.
No, it's April's.
Refresh. April. All right, let me.
Showing for me. Yeah.
Oh, okay, hold on. This is May's, and then April's. Let's see here. All right, let's go all the way April 8th. Oh, okay, here. Okay, so we see a big chunk right here. Actually, it was trading lower than that earlier today because I saw it earlier over here. It was trading at, they were buying these things at about $1.90 and $1.70, $1.90, right around here, 215. And if they're starting to warm up to this, or there's some, they're not, there's no earnings, there's no reason to believe that there's an announcement coming up. So if anybody knows of an announcement, I mean, just put it in the podcast for everybody to see. But this is interesting because they're coming after this 80. You could see the 70, 80, 85 line in a decent way. And I think if you get this breakout, you can easily see, you're talking about 80 needs probably about 105 on this thing. It's what they're looking at. Yeah, 105, 106. Yep, 107. Okay, so you're talking about on a risk reward basis, 95 is just break even. So they're looking to make some money. So they would need something close, call it 100 to 110, which is kind of what we've talked about here. There's very little volume here. You do get this volume up here where you'd probably get a stall, but I think here you have something that is interesting if we can get through 70. And for some reason, people looking at potentially getting this through 70. So you had this, you look at this here, right? A little bit of a V here, rejection of price, and it's held. And for the last 5 days. So after this rejection down here, it's held. Is the next move. This was 40 to 65. 55 is the next move. Basically, it would get us right to about, is that 40, right? 40 to 65 is 25. 55 plus 25 is 80. If it gets through 70, I don't think it stops at 80. I actually think you can get a runner here, closer to 100. So this is just, seeing the flow and then knowing the name, liking the story, thinking the valuation is a little bit too high. However, they're coming after the calls now, so it's making me rethink that perhaps this is sort of that moment where they're gonna come after it. So it's something to think about if you want to read up on QuantumScape. I think you need a science degree to fully understand what's exactly happening there. But the guy's apparently a whiz. He's trying to reinvent the battery, and they team out of Stanford. Bill Gates is involved, and you got a lot of potential. Again, 5 years out, they've raised some money, so it's one of these 5-year, 10-year type of stories. But if they hit, it's the sky's the limit. Like they reinvent the battery, and it's game over. So that's QuantumScale.
Well, now
that brings us, I guess,
right to 5 years. Cathie Wood, yeah.
So let's talk about the 5-year lady. Cathie Woods came out with a $3,000 target stock price over the weekend, on Friday, actually. And I think it's, look, I mean, you look at the report, she's leaning on them doing 5 to 10 million cars. I think, the pushback was she didn't put in any capital raise. So to produce 5, 10 million cars, you need, it's very capital intensive to produce cars. And, it's $5-10 billion that they have, or $10 billion they have, is not going to do it. So they have to have some equity raise. The other thing I would say is that she's a big believer in autonomous driving. And I would say I am too. I don't know if she thinks 2025 they'll have a car ready to hit the streets. I sent you this too this morning, the ZeroHedge. There was a great video there on Tesla people driving their autonomous car. And frankly, I thought it was a disaster. I didn't know how somebody got that video. They put it out. I don't know if they do that. It was the first time I was seeing one of their videos, but it was scary. I mean, it's actually, you should watch it. You spend 13 minutes just watching that video. Someone's in the car with two people in the car, controlling the car and taking the wheel. Now, I think it didn't look well. To me, it was a disaster to see. We're so far away from just letting this car go by itself and do whatever it wants. I mean, there's just so much to think about when and they have, I think you told me it was 1.5 billion miles under 15 billion. Yeah. 15 billion miles under watch of how the car moves, programming this thing. And after 15 billion, and they've been doing this for years, after 15 billion hours of driving, or miles of driving, whatever it is, miles driving, you see the results here. It's scary. they're going down a highway. There's a bike on the side of the road, and the car, to avoid, because it values human life, it's programmed to value human life. It literally sways into the oncoming traffic, and the guy has to take the wheel and move it back into regular traffic. So it's crazy to think that, how, I don't know how you're going to have millions of cars like this at one time. It's crazy. He turns the corner, and literally the guy has to, on video, the guy has to yank the wheel to not go over the curb. It's nuts. He's sitting there, and the car's turning at one point, simple left turn, and he's like, whoa, 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 and you can hear him in the background. So all of this autonomous driving, the first video I wanted to see was, hey, this really works. This is pretty cool. And this, in traffic, man, it was a little scary. Now, Elon Musk, granted, Elon Musk might be playing 5D chess here, okay, and fooling everybody. So maybe he knows that's a terrible video, so he puts that out, and he gets the shorts all on top of it and all excited, like this is never going to happen. And then he says, oh, I got another video coming out in another month, and we're making progress. Maybe that video just completely blows out of water. I have no idea. But the video that I saw today, man, I would have to say 10 years before autonomous driving, because there's so much to think about. You hear them chatting, and you hear the guy excited about a right turn, a left turn. And I'm thinking, there's a moment where there's a car double parked. Two cars double parked, and the car's trying to go in. It's in the middle of the lane. There's cars honking at this car. Nobody knows that it's a driverless car. This car's like, what are you doing? So I don't know. There's somebody said that. Now, the other thing I'd say is on Tesla, you got a lot of action today in the 1 week calls, in the what do you call it, 700 calls. There was action last week. The thing that I want you to, we have to learn, what you should probably do is sort of go and study the law a little bit. But, we talk about how hedge funds managers might go to a presentation, talk about their stock, and they'll be buying puts or calls before going on stage or before talking, or they'll tell their friends, you should buy this because we're coming out with this idea. We love this idea. They're allowed to do that for the most part. Warren Buffett, not so much, but because he's one of those guys the SEC has deemed material information. But, other hedge fund guys, they're just, this is my idea. I can talk about I don't know anything. I could talk about my idea till I'm blue in the face. I could tell all my friends about my idea, and we could all buy calls. Well, I'm not sure. I think ARK can buy calls in front of their idea as well. And I think individual investors can buy, employees can buy calls. So there's a lot of people working on that Tesla piece. She says she's been working on that piece for a month already, six weeks. And so she had promised this about 3 weeks ago. And so, I mean, people can easily be buying in front of this, in front of this call on Friday on a weekly option. So we did see some action last week. It's interesting. I think Tesla is like a lot of these stocks. There's the market's got to make a decision on where it's going to go first before everything can move. If the market goes up, the overall market goes up, I think some of these stocks could explode. But I think the market has an equal chance, or maybe more of a chance, to sort of do nothing for the next 3 months and sort of drift lower, is my impression. And if it does that, then it would be difficult for the option buyers who are looking for these radical moves on 100 vol names to make good money. It'd be very difficult. So that's something to consider in Tesla. What else?
Cool.
What else did you see?
Banks.
I think today, did you see the one that was down today? This RLX, Chinese name.
Well, yeah,
I would just say, look, yeah, it got halved. I would just say, look, you invest in any of these names that have one, China in it, two, their fantasy stories. You get one bad news, like China's going to regulate this e-cig company like they do tobacco. Right. I mean, RLX is kaput, right? It's not going to be worth anywhere close to what people think the opportunity is. Okay. Which also, speaking about the Chinese government, when you go back to Tesla, one thing I find interesting, and we talked about Tesla about a couple of weeks ago about this, where the Chinese government brought Elon Musk into the room, and he's like, hey, look, your factories, they're not up to par, right? We need to fix that, and slows things down for Tesla. Now, over the weekend, I read something where he's saying to Tesla, military people can't own the cars, can't own Tesla, right? Why? Because they have cameras, audio, and I have a feeling that it just feels like, I don't think China wants Tesla to be the number one car in China. That's just my opinion. I don't think they operate that way. I think they want Tesla to be there, build the factories so they can take all the knowledge of how to build these things. And I think they want one of the three, NEO, XPV, or LI, to actually, do really well and be, all over China and then ultimately around the world. But I don't think it's in their best interest to say we want Tesla to be the number one brand. So I think this pushback, you'll keep getting this pushback from China saying, you know what, it's a spy mobile. And first it starts with the defense people, military can't have own Teslas. Then it's, you know what, we have, we have 10 million Teslas on the road here, and they're going into people's houses with audio, with cameras. And, I don't think we want that either. Right. And so I just get nervous that China will be a little bit more pushback. Will push back a little bit more on Tesla, and Tesla's a big part of their story. So that's something also to think about with the Chinese government. Look what they do with RLX. Look what they do with Baba. I mean, if they want to take Baba down, they just take it down. It's not. Baba was the biggest company there, and they just literally shut down Jack Ma in just literally in 2 weeks. He makes the wrong comment, 2 weeks, it's done. So I think as things are developing, new technology and new stocks, I think you got to be careful that the Chinese government makes one statement and these things could get cut in half. So keep that in mind when you're investing or looking at some of these types of names that are out there. It's, China is a whole nother country. It's not like the US where there's, maybe there'll be an FTC, a trust lawsuit on the big name. China in 24 hours says, no, you're done. Stop. Stop the internet, stop this. So, I mean, that's how it works. So we got to be careful there.
Okay.
Okay.
Fair enough. Cool.
Good.
Let's see what we have.
Did you see anything? Did you see this TEVA?
Yeah, they're rolling up, right?
So we talked about TEVA last week, and TEVA had some options that were rolling. They were taking them from. See here, TEVA. I think it just makes sense. I think when I tell you what they did, I think you'll say, okay, it seems like it makes sense. They just basically took what looks like their Aprils. Okay, the April 11s were trading here, and it looks like they rolled them into the Junes. April 11 to the Junes. And you get the earnings here in May. So we talked about what looks like negotiations happening, because the family raised their bid on, or their offer on what they would pay for. The Sackler family raised their offer on what they would pay for, pay the government in fines or in the lawsuits to clear everything up. There's got to be negotiations around. We're talking about billions and billions of dollars at stake. There's a lot of negotiations around, and the CEO has been outspoken over the last, call it 2-3 quarters, on him wanting to sort of clear this up. So if he says something positive that things are going in the right direction and it could be done by the end of the year, then again, you could see TEVA sort of getting back to the road it was getting to before. We talked about the mid-teens when it was trading 13, 14 a while back. So that's something that's interesting.
Okay, nice. Good.
Cool.
We got banks got hit pretty hard, didn't they?
So banks, it's somewhat welcoming here, but let's see the banks are up because of the yield curve, right? Banks are up because of the yield curve, because as we said, they're going to print money, right? So they'll be printing money with the big an increase in that yield curve. These bonds have gotten killed. You see, the last 3 days after disaster last week, the last 3 days have been trying to get some interest here to the buy side. We talked about this rebalancing, and the banks may just come back in just because, we talked about this, selling spies, buying bonds. If there's a bid in bonds till the end of the month, you can get this back to 140, 141, something like that. And that bonds up, interest rates down. This is 20-year interest rates down. And then you're going to have your yield curve sort of come back in a little bit, which would in turn hurt the banks. The banks are also under a little bit of pressure because Powell did not extend the SLR, which was basically, it's a leverage. It's allowing the banks to lever up a little bit. And let's look at something like JP Morgan, Bank America. So after this huge run, Powell last week basically says, no to the SLR, and it has been under pressure just because they'll be constrained a bit with the amount they'd have to post up for. It's almost like a margin amount or collateral. So this is 151. Again, we were talking about hopefully getting it down to like the 145, 147, somewhere around here. We'd like to see these. It's almost there to start maybe thinking about taking a shot again at the banks. But we might get that, I think, after. I'd like to see that sort of after April 1st, because I think going into April 1st, we're going to see that bid in the bonds. And look, if the dollar starting to act a little bit stronger, if the dollar acts stronger, people are going to jump into those bonds, 2-year bonds. Remember, when Europe is trading at 0, we're trading at 2%, and the dollar starts acting like it's okay, people are going to jump in for the 2% yield as opposed to 0. And I think that could hurt the banks in the short term. Until things stabilize and this rebalance is done behind us and everything, the bonds seem to be going back to normal, or finding a level after being down what seems like 30 days in a row. This is something to look out for.
Okay.
Okay.
Fair enough.
Good.
Cool. Guys, don't forget to subscribe and like if you haven't. We appreciate your support. Let's have a question now, Felix. What do you say?
Yeah.
Okay, let's see. This one's interesting, from Blake.
Spoken about Visa and MasterCard a lot. Visa had a DOJ probe that impacted MasterCard as well as V. Does this create an opportunity to do these investigations make you want to get out? I don't like DOJ probes. It's not like I want to rush out, but I look at you never like a DOJ probe. You just never. It just anything that has to do with the government, just like antitrust, it causes people to investors, large investors, to pare down the positions. In some funds actually have rules that say they cannot invest while something like that is going on. Like, for example, if there's a merger going on, they have to get out of the stocks or pare back by a significant amount. If there's some sort of FTC or DOJ investigation, SEC investigation, they have to get out. They're not allowed to be in stocks. It sort of prevents, a disaster. So there are rules in place to prevent disasters. So yes, I mean, I would say that I'm not as gung-ho as I was, simply because, looking at it, these types of moves with this type of volume makes there's some real issues there. Right, you're talking about significant volume. That's real. What you call technical analysis. That's pretty damaging to what it was trying to build here. Now it's held this. It's still, in this bullish trend. However, it is something that is it's something to watch, and not as gung ho as I would have been before without it, for sure.
All right.
Okay.
All right. Cool. Fair enough. Now, what do you say we jump into something like DKNG? I've seen some action there.
DKNG.
Yeah.
DKNG was, let's see here. DKNG. The stock trades so well, to be honest. I'm we had bought puts a while back over here, and it just trades very well. I watch it all the time. I think there's holes in the whole thesis of, Cathie Wood loves the stock. I get the whole states thing. The valuation is so high on these names. It's is everyone going to be betting on sports, and are the margins going to remain where they are? I don't think the barriers to entry in this industry is that high for anyone who has a casino website and get some sort of brand ambassador, and you have yourself a sports book. You have Penn Gaming in this. I think out of all of them, Penn Gaming is the better one, because they're able to get the free advertising that David Portney brings in. So I think if you're going to pick one, I think the Penn Gaming is the better of the two. Every state will open up. They'll come at a price. New York wants to open up, but wants to charge a significant percentage off of the top. And so again, I'm concerned that these are so high, but the reality is that these things trade very well, very well. That chart it doesn't look like it's hit its peak just by looking at it. Unless somebody differs, someone thinks different. This looks actually pretty damn good. And I don't like the stock valuation. I'm trying not to like the stock, but it looks pretty good. Now, we did see call buying last week, I believe. Last week.
Yep.
And we did see call buying last week. And let's see here. It looks like they got out of it today. So the call buying last week was around $7. So they were buying the 85s for about $7. And we talked about how much of a move it would need. Today, it looks like they're getting out of the position. This was actually looked like a sale here in the morning. Looked like they got out and the stock sort of drifted back up. But, I don't know what they were thinking here or why they changed their mind in the last 5 days. They might just be buying the stock or thinking that the stock's better off. But if you were long because they were long, they just got out. So I'm not really sure. This is a name that, again, I'm confused about. I just think it's so expensive. And again, the barriers to entries in this name are in this industry. I don't think it's so high. Think about airlines, right? Airlines, you can say the same thing. Airlines fly people all over the place, and then Priceline comes out, in 2000, and it lists every airline and the price you would pay for any ticket. And then all of a sudden, airlines are in competition with every other airline right in front of your face. You actually have to, both planes are going to take you to Miami for the winter. And now you have to actually choose, right? You have to actually choose which one you're going to choose. And you just you do it by price. Yeah. So ultimately, all of these gaming sites, you're going to do it by price. It's the same sporting game. They're not doing anything. They're creating a sports book. It's real people that are making these markets. Now computers are jumping in there, but essentially you have 1, 2, 3, you're going to have 20 of them, 30 of them going down the row. And all you're going to say is which one is giving me the better odds. That's all people care about. People care about what's the price. It's sort of like saying, hey, everybody, there's 16 exchanges and everybody's selling Apple stock. And one person is selling one share of Apple at 122. The other person is selling one share of Apple at 123. The other person is selling Apple at 118. Well, which one are you going to go? You're going to go to the 118 one because that's the best price. So that game, that whole sportsbook game is essentially price. And you always got to be winning on price. There's a little bit of experience. I can understand. There's a little bit of this, the DraftKings got all these different like fantasy things and whatnot. I get that. And you got to give that value. But at the end of the day, for a sports book, Penn Gaming knows that they're a sports book. But what they have is, in order to get people on your sports book, you need, advertising, the brand, get in there. But still, even that gets whittled down because at the end, you still got to beat them on price. You're not going to buy Apple stock at 120, 125 when it's, somebody's offering it at 123. You're just not going to do that, right? And so that's how over time, the margins just go so tight. They're going to get to nothing. It's going to be lost leaders, which is what the casinos did. Eventually, they do the sports book. They don't plan on making a ton, but because people had to come physically to the sports book, now they're at the casino. They're in the hotels. They're playing blackjack and everything else. So there's something. I think at the end of the day, look at the brokerages. They all went to zero commission, right? If you're paying $10 a share and an option here, and then this one you're paying $5, and then Robinhood is zero, everybody goes to zero. Then all of a sudden everybody changes to zero. Now it's like, oh, I'll just leave Robinhood, I'll go here. It's all zero. So you have to remember that as these stocks are being priced for 25 years down the road, well, in 5-10 years, there's going to be a site that you could just literally press a button, just like Priceline, and just say, yeah, I have an account on all of these. And you know what? If I want to bet this game or that game, I'm just going to see the price and say, I'll take it right here. Boom. And then there'll be arbitrages. So it has to all get really tight, because if someone is bidding 120 and someone is offering at 118, you can pay 118, sell it at 120. It's not going to be able to happen. So all of that arbs and that arbitrage knocks the bid offer to very, very, very small amounts.
Right.
Very, very small amounts. So that's my story on DraftKings. That's why I don't like it over the long run until people realize that, or maybe it doesn't happen. That's my opinion on the industry. And I think there's something ultimately people will see that the margins are going to get crushed. and the competition is going to grow, and there's going to be sites that force it. It's not going to be one of these companies. It's going to be another outside company that's going to force it. That's the problem. That's the problem.
Okay.
That's all of these names. You have to, if they're telling you revenues are going to be X in 5 years, you also have to say, well, what are margins going to be in 5 years? What's the business going to look like in 5 years? I get more people are going to gamble. I get more people, are the states going to just allow a company to come in and take everybody's money? Some company's going to come into New York, literally billions of dollars will transact. They're going to make billions, and New York's not going to take a bigger cut than 5% or 10%. New York's going to say, no, you want to be in New York? We take 30% or 40%. We want to share in your profits. These are our customers, our people. If they're not spending money on, on lottery tickets and stuff like that, they're spending money on your place. Well, we make 30-40% margins on lottery tickets and things like that there. So we're not going to just that money is either going to be shifted from here or to you, and then it's going to go. I have a hard time thinking it's going to happen. So that's how I get the revenues are going to go up, but what does the business look like in 5 years? A lot of margin compression, and it's a big pot that everybody's going to want the money. So she's right. I think Cathie Wood is right about the states. They need money. They're all going to cave. I agree. But at the end of the day, what does the business look like?
Nice.
That's
great analysis.
All right.
I like it. Cool. Any ones you want to cover?
You know what? I saw something in. We've been looking at these. I saw RCL, an RCL trade. We've been looking at these names: CCL, RCL, NCLH. They've been trading well. Let's take a look at RCL. I just want to show you the type of trades that every once in a while you'll see in the front months. Okay. So we have RCL here. Sorry. Can I do that? Yeah. All right. Here we go. So you have this going on here a little bit. This is fairly positive. I mean, we've been doing this, and it's a lockstep move from here, and it's just been going up as the economy is opening up, right? So if it breaks through this, you'd expect to go 67. You'd expect it to go back up 67.5, 97. That's 30, and you could say here 30 and 80, 110. Okay, or you could say the difference between here and here, 80, 97, 17.5, 17.5, 90, 107.5. Okay, so somewhere around here. Okay, somewhere around there. But someone's coming in and saying, you know what? I just thought it was an interesting trade. They're looking at the 1 week, this week, the 89, 84, 1x2 put spread. Okay, so they're buying one of these. They're paying $1.90.
Okay.
And they are selling 10,000 of these at 47 cents. Say, so that's 47 cents times 2, right? Because they're selling 2 more of these. 47 cents times 2 is 94 cents, and they paid $1.90, right? So they're paying 96 cents for this 1x2. 1x2. They buy 1, they sell 2. Now, what are they doing there? I think I liked it because you don't see a lot of these often, but I mean, every once in a while. And they're buying the 90 to sell the 90. What did we say? The 84. So 1x2. So basically what you can do is you could just take the difference, the 89, 90, 84. You could take the difference, $5. Okay. The easiest way to do it is forget about what they paid, 96 cents. You just take $5 and you subtract the $5 from 84 to 79. So 89 to 84, that's 5. 84 to what is less 5 is 79. Okay. So 79. So at 79, this structure below 79, this structure is going to be worth 0 at 79. Now you're paying 94, you're paying 96 cents for this. So you actually needed to be, between 88.04. Okay. Below 88.04, you make some money to 84. You would make $4.04, right? Maximum. Okay. So your maximum gain is going to be at 84 because these are going to go to 0 on Friday, and these will go to $4. I'm sorry, $5. Okay, and you pay 96 cents, so you make 404. If it keeps going back down, you will actually start losing money at 79 79 plus 94 cents. So 79.94. So anywhere between 79.94 and 88.06, that's where you're making your money. Is this 88.04? Sorry, 88.04. So they're doing that to sort of say, all right, if we get a pullback, we're going to make some good money here. If it trades 89, we want to own the stock anyway. I mean, 79, sorry. If it trades 79, we want to own the stock. And sort of seems like a good place for them to buy stock is right back around here. Right. So there's good, this spiked up. So right around here, 79, they have to own the stock, which is right at the 50-day. So it's just a way for, if you're a big guy and you hold 1 million shares, it's just a nice way to say, all right, I'd like to protect for $3-4, but if it gets too far down, I'll buy the stock. I'll buy more. We want to buy more is what they're saying. So RCL, it's bullish, but they're bullish a little bit lower in the high 70s. Okay, so that's really the big reveal, that they're bullish in this high 70s. Okay. Cool. Questions? I think there's a question on hedging. I see a question on hedging. Look, the hedging that we have right now is we have a shorter dated option. So a shorter dated option, the part that most people, when they're playing this game, they got to get comfortable with is, on a hedge, you might lose that money. It's sort of like there to be as a hedge to really help you. When we have 5 positions on, and I only have 1 bullet to hedge, if I use a stock and I use a 3-month option on a stock, then the 3-month option on one stock is going to match up maybe with 1 3-month option on another stock. That's not going to match up well with the whole portfolio. But if I have one market hedge that's 1 week long, 1.5, 9 days to go, 2 weeks to go, that protects me against a big downdraft. Because if I can make 150 to 200% on that, that's going to protect probably about 4 positions. Okay, 4 positions. 2, you'll have to, and again, it's the way I read it, a lot of our positions shouldn't be full positions. They just shouldn't. They either we didn't get into a full position, or the positions are 2/3 have been taken out, or they've reached 200, 250%. Once a position reaches 250%, I tell people, look, you're on your own. I don't, you can, some people wait till 1,000, some people wait till 500, some people ride it to 700 back down to 0. I have no idea. I do my job when it hits 100%. That's my job to get it there. But on names that when I look and I say, okay, we have this type of name, I'm trying to match up duration. And duration means, we're not matching up 3-month options with 3-month options. We're trying to match a portfolio of 5 to 7 options with perhaps names that, frankly, on a 3 to 5% move down in the market, the names, probably half the names we're long, shouldn't move down as drastic as the market's feeling to move down, right? They're sort of names that have some value that they just shouldn't move down that bad, right? Because, they're already not loved stocks. They're already stock. They're called value stocks. They're value stocks that are trying to get some momentum. And so it's important to realize when you're trying to hedge your portfolio to try to match durations, okay? Or take in less time, less duration. So a 1 week option, a 2 week option, that 1 week, 2 week option is going to protect potentially 4 to 5 names. Okay. You might lose that hedge, but if it's concerning, or where the market is, and I'm frankly very concerned with the market. I'm concerned with how it's trading. I'm concerned that there's, the market's just floating up here. It's not inspiring volume. And I'm concerned that we're in a mismatch zone of equity flows coming in, just because these checks have come in, and we're entering in the next few days, potentially, people starting to peel out a little bit at a time of equities and getting into bonds. We're seeing a bond bid today for God knows what reason. And that's how I would think about it. So there's a lot going on, from the macro to the individual stocks. But I think if you look at the board and you see the unusual activity that we're seeing, there's a lot of there's a lot of just people covering or taking out, or they're shifting things around. They're getting more time. You see in the TEVA getting more time. They're either moving to more time or they're reducing positions just by getting out. And that's risk management. That's what I'm trying to tell you about duration, where the shorter the time frame, the higher the risk. So you want to just get out to June, July, let things transpire, let things work, and let the volatility kind of work its way out. Let the market decide which move it's going to go. But that's what I'm trying to do. I'm trying to add duration. You know, right now duration is catching up. May is June, so you add duration to kind of try to reduce the volatility. So that's how you got to think about it, and it takes a little bit of time to perhaps understand that. But you could start seeing that duration is important for the portfolio. I have 3-month options, 4-month options. How do I hedge 4 3-month options? Well, I would say, when do you think the market's going to come off, or how do you think it's going to come off, or what event are you scared of? Maybe match that 2-week event with the 3-4 options, and that should kind of hold.
Right.
Fair enough.
That's a good rule of thumb. Yeah, I like it.
Good.
Nice. Great. Let's see what else.
Any other questions? Since you're concerned about the market, what is your opinion? I see one here. What is your opinion on UVXY, which is volatility instrument? I have 1,000 shares with 50% down due to decay. You know, on these UVXYs, these are, what's the UVXY? Which one is that? That's the short-term futures ETF, Ultra. So it's 2 times. You know, the thing about these ETFs, I would say we talked about this last week, actually. They all go to, they're programmed, even the 3 times or worse, but they're all programmed to eventually go to zero. So the greater the volatility, the faster it starts moving to zero. So if you catch a period of high volatility in these names, when you come out of it, you're going to see that the being long it or short it, you know, you would have done better by just being long or short the actual underlying. You know, yeah, I mean, look, if the market does turn down, can we see volatility? Sure. I mean, but I'm not a big fan of the doubles, the triples, and they're fun to play for a week or so, but you know, I think it's leverage on top of leverage, and it's a tough product to trade. When you're right and you hit like the VIX calls, and if you can buy call options, you buy a little call and not worry about it, and just say, look, if the market crashes, this thing's going to explode. Right. That's how you kind of got to look. And I don't mind looking at that, but trading the VXX, and it's not as easy as you think. 2-3 times is not easy. So any of these double, triple, 3X, I would just caution you that just know in the back of your mind, they go to zero. They're programmed to go to zero. That's why they go down, and then they split. They reverse split 4 to 1. So they bring the price back up. So then you have 4 times less. So you buy 400 contracts, and then the reverse 2 to 1. Then you only have 200 contracts. After the stock goes all the way down, over time it goes up. You know, when you have something in oil and gas, and when you're rolling, you got to roll futures every month. That's a cost to what you're holding. So that roll is a cost. So these are products that are there's a lot going on. There's a lot of ways that you could actually get ripped off, frankly, and not even realize mathematically how this product is designed to go.
Right. Fair enough.
Okay.
I like it. Good. Here's one more question from Priya. This is a hot topic, NFTs.
I love this topic. You know, I at first I laughed. When they said Jack Dorsey's first tweet was $2 million bid for it, and I just was thinking, is this where all the money's going? Right? There's so much money in the world that people just doing this. But you know, I then read an article about, I guess Beeple is another guy. He did $60 million art, you know, and I read something which I thought was interesting. It was an analogy, and it sort of made sense. You know, the Mona Lisa, you can make the Mona Lisa. Anybody can make the Mona Lisa, not anybody, but an artist can come in. You can almost replicate the Mona Lisa exactly like the Mona Lisa, yet it's not going to be the Mona Lisa, right? The true Mona Lisa represents time and an era and what was going on in that era. And so, you know, if I related that and said, you know, 100 years from now, who knows if Twitter is even still around, but maybe there's social, I'm sure there'll be social media. Well, I'm not sure of anything 100 years from now, but a social media, let's assume, is around. It's our lives are different. It's all around technology and how we connect. And people will think back, remember, 120 years ago, this, this Twitter, the way it is today, is not the way it was, back then. Back then, you tweeted and everybody popped up. Today, it's something vastly different or whatever. And, I thought, imagine you could say you have the first tweet ever and it's yours. And that's like art, right? Because it represents in a museum. People would say, hey, that's the first tweet. It is his. That is the first tweet. And it's certified. And you'd have this whole backstory on who Dorsey was and how he created Twitter. That's what art is, essentially, right? It's sort of freezing in time some moment and saying that's the right one. Yeah, there could be other tweets and we can create one. I can do one on PowerPoint and create the same thing. But it's not going to be the actual tweet, which represents Jack Dorsey's introducing Twitter. So something like that, I thought, makes sense, right? I mean, who am I to say Leonardo da Vinci's paintings, they're paying $200-300 million. And you're thinking, that's crazy. Why would somebody do that? It's just to say baseball cards right now through the roof, sneakers. I hope they're not smelly sneakers, but regular sneakers. People are buying sneakers as collectibles. So look, that's the whole new thing. The other thing that they're doing is they're all these virtual worlds. These kids, my kids are playing Roblox. It's a virtual world, and they're with their friends, and they have all. My daughter has her friends. I said they have their friends, and they talk. And I'm looking, and I'm like, oh, you're playing with your friends. They're playing in this virtual world. They're running around like maniacs, and they're it's fun. They're joking with each other. And I'm thinking, wow, these kids are being trained at 8-9 years old that a virtual world is correct. So now they're actually selling real life. They're selling property. They're selling beachfront property online. And people are paying on average like $3,000 for a plot of land online. And I'm thinking to myself, who would do that? But you know what? There's millions of dollars being poured into it. And if you want to be where all the cool people are at, like a club or whatever. And I think if you get into the house, I think there's chat rooms and you're literally, I just started thinking to myself, yeah, why not? Why wouldn't Match.com or like have a bar online? And if you don't have tickets to go into the bar, because you don't get into the bar and you can't meet other people, men and women can't meet because, you don't have a ticket. Where do you live? Well, I don't have a plot of land either. Well, you're not even involved. Like, who wants to be involved with you? You don't have a plot of land. Right. Like, if you and I are going to leave this bar and we're going to go to your apartment or house, like, can we watch TV? Like, this is how the world is going. Like, this is what I'm thinking. So I'm not laughing anymore because I did do some reading on this. And frankly, I'm not laughing about it because I see my kids and the way they're being programmed into like this whole virtual life, and they're not going to school. It's the first time ever my kids are like, I can't wait to go to school. Like, I can't wait. It's like they're missing their friends and they're missing human life. But I can tell you that while they're not in school, these things it's all virtual, and it's just getting more and more and more powerful for them in their minds as they're growing up. So, it's something that is, I think it's interesting. I think there's something to be said. Look, when there's money like that being thrown, people laugh at Bitcoin, and you know what? If you bought it for $1, it'd be worth $60,000 today, or whatever, 58,000. So, I'm not laughing anymore. I NFT at first I thought that's just ridiculous, but I see there is this ecosystem of things. Now, is it probably too much right now? Maybe. As soon as life opens up and everybody tries to be human again, and we all like want to go to a bar and actually meet people at a bar, then maybe people don't want to go to a virtual bar and kind of sit there. But maybe not. I don't know. And this is the next 100 years. Who knows how it all works out? But I'm not 100% convinced. I'm just not laughing anymore. I'm somewhere in the middle, going, I guess you got to be in it until last man out. Is left holding. There's the last people in there going, okay, where'd everybody go? I just bought a house on the beach for $1 million, and it's like there's nobody bring to my house. So all of that, by the way, those houses, I say that because that's where the art is going to be hanged up, right? People buy the art to hang it in their houses, which they have to pay for the houses in communities, which they can't get in unless you know somebody. And it's like a real world. It's like a real club online. It's crazy. So anyway, that's my NFT. What do I know? I don't know. I just read it, and I could see some validity in it. That's what I think.
It's fascinating. It's interesting. For sure.
To say the least. To say the
To
least.
say the least, yes.
Awesome.
Well, thank you, Felix.
Anything else?
Great session. I think we should call it. And I'll mark
All right,
down
we'll call it
questions.
today. Here, go ahead.
Are the questions, and we can answer some tomorrow. Thanks, guys. This was great. Thanks for commenting.
We'll be back tomorrow.
It's very hot. All right. See you all tomorrow.
Take care.